My name is Jake, welcome to the channel. In today's video, I'm going to cover two topics. The first part of the video, I'm going to talk about investing habits, and the second part of the video here towards the end, I'm going to go in and I'm going to share some updates that I've made to the portfolio, share kind of a few things that have been going on and really diving into the portfolio. So if you've been following my channel, that'll be really interesting to kind of see what I've been doing in terms of the actual portfolio, the updates that I've made. So if you're new to the channel, my wife and I, we're looking to achieve financial independence. We're in our mid-30s and we're looking to achieve really so financial independence and retire early by our mid-40s. We really focus on financial independence. The retiring early part is kind of that icing on the cake. It's not such of importance to us. We're really focusing on financial independence. Here in 2020, there's been a lot of things that have really caught a lot of people by surprise. Earlier in the year, we had a lot of things going on here towards March. A lot of us, if you're invested in the stock market, you probably saw your portfolio down about 30, maybe 40, and in some cases 50%. I don't know about you, but it kind of felt like this.
Watch this. What the heck are you doing?
That's what I'm talking about.
I love that show. Leave me a comment below if you know what movie that's from. I shared that clip with my wife prior to making the video here, and I was just laughing hysterically, but she didn't think it was funny at all. She grew up in Germany and never saw it. I grew up in the West here in the US, and it was just a classic, and I thought it was really, really funny. And then she was looking at me like I was an idiot. So if you thought it was funny, please give me a like, because I just need to prove to her that she's wrong and that it is actually really, really funny. For those of you that have been following the channel, I talk a lot about having a goal and having a vision for your financial future. Equally as important is having the right investing habits to make that a reality. My wife and I, we were out here in the outskirts of Austin. So we live down here in Austin, Texas, and we were thinking about, the next coming years, what are some of our goals? What would we love to do? And we went out and we started looking at different property and looking at different, options that we have. Our absolute dream would be to buy a piece of land and build a home on that land and really be able to retire early and have really the flexibility and the freedom to do what we want. And we had a really awesome opportunity this weekend. We went and we were looking at different pieces of land here in the Austin area, about an hour outside of Austin. And it was really, really exciting. And it got me thinking that I talk a lot about having that vision, having that goal, but if you don't have the right investing habits to get you there, it's going to make it very, very difficult for you. So what do I mean by that? Before investing with M1 Finance, I was investing with different brokerages. I've used TD Ameritrade in the past, previously Scottrade. I've used Robinhood. And really in the past, what I would do is I would set limit orders. I would set, it was all very, very manual. I'd have to come in here and type, okay, I want to purchase McDonald's, right? And then I would go in and I'd put the quantity and the price and, et cetera, et cetera. It was very manual, and it was per individual stock or ETF that I was looking to purchase. And it was a very manual process. And what I noticed is it was also very emotional, right? You're looking at the price, you're trying to buy in at the right time, and it was just very, very overwhelming. And I thought to myself, wow, I just wish that there was an easier way to do this. Because I was using other platforms like Robinhood and TD Ameritrade, it was a very different experience when I started investing with M1 Finance. All of those habits that I had before were really not relevant anymore. With M1 Finance, it's not a buy and sell platform. It really, really isn't. In fact, they're so vocal about this that they even tweet about it on their Twitter account that they are not tailored towards day traders. Someone with day trade in their bio just followed us. Who's going to break it to them? What they're implying here is this is not a day trading platform. And in fact, it's the exact opposite. A lot of people that come over to M1 Finance and start using M1 Finance, they get really discouraged and maybe in some cases frustrated because they are so used to day trading. They want to have that more autonomy and flexibility over their portfolio, buying and selling as they're used to with other brokerages. M1 Finance discourages day trading. In fact, they incentivize against it, where they only have certain windows that you can buy and sell through their platform. So it really is a long-term investor's platform. So that was the first thing that, when it comes to my investing habits that were influenced by M1 Finance, is really having that long-term mindset. And what helps me to focus on really are a couple main points. The first point is it helps me to automate my transfers. I'm automatically transferring and funding my portfolio from my bank account, from my 9-to-5 job, right? Like everybody else. And then with M1 Finance, what they do is then they will automatically invest into your pies based off of your target allocation. And that's what I absolutely love about it. So what that means is if it's automatically investing into your underweight holdings, that means you don't have to manually rebalance, right? So that's a big thing, especially if you're looking to keep an equal weighting in your holdings in terms of your overall portfolio for diversification. M1 Finance will do that automatically for you, which is amazing. Another thing that I love about that is the diversification. So when you go down and you look at the portfolio, you can have it set up in different ways. You can have it set up based off of sectors. You can have it based off of growth versus income, right? Those different strategies. And so it makes it very easy to set up your portfolio, set it up and forget it. Like that's what I absolutely love about it. And especially if you want to invest in individual companies and not ETFs, and you want to be a little bit more involved, you can do that. And it's very hands off, right? Because you set it up once. And if you do want to make changes or if you do want to update it, your portfolio, it's very easy. You just go in and you update the percentages. And then the next day when you fund your portfolio, M1 Finance will automatically invest into your updated allocation, target allocation. And that's really great. And the target allocation is set here, and you can see, so here coming on Monday, when I fund the portfolio, what M1 Finance is gonna do is it's going to automatically first invest into my holdings that are underweight, right? So right now, based off of the target allocation, for example, technology is overweight, and then therefore it's gonna invest into my underweight holdings. So we talked about automation, so automatically setting up transfers in your portfolio. That's a very important investment habit that really, it makes it very seamless with M1 Finance. Now, for example, if you were to do this with Robinhood or with another brokerage, yeah, you can automatically transfer over your investments, but you have to manually go and purchase them. With M1 Finance, I set up my transfers and I don't have to look at this for the entire year, and it will automatically be rebalancing, investing into my underweight holdings without me having to do anything. And that's really very different than other brokerages out there. We also talked a little bit about the diversification, how you can set up your portfolio, you can diversify it the way that you want. It makes it much easier to manage than, for example, if you had to manually go and, based off of how your portfolio is growing throughout the year, it's going to be a little bit more manual versus having it here all automated through M1 Finance. So you have the diversification. And then really lastly, this goes hand in hand with the automatic transfers, is dollar cost averaging. I can't tell you how many times I get asked by new investors, should you invest before the election, after the election? Should you invest? It's an all-time high. The market's at all-time highs. Should you do it? Like, there's so many things that can discourage you from investing. And what I always focus on, it's not timing the market. It's time in the market. That is the most important factor for me when I look to invest. I am investing the same amount this week as I did the week before, and as I will continue to do in the weeks to come. Now, that is my strategy, and that's what helps me sleep at night, is I'm not trying to time the market, right? I'm getting average market returns, and I am completely satisfied with that. I know that if I wanted to try to maybe, time the market and try to outsmart Mr. Market, like, You know, for me personally, I would prefer to sleep well at night and then just average into my portfolio every single week. I've noticed when it comes to investing habits, those are probably the most important factors, right? Not talking about like the type of investments that you invest in, right? For me, I invest into more established blue chip companies that are cash flowing, that are rewarding me as a shareholder in the form of a growing dividend. That's the type of investments that I invest in. But the investing habits that I have control over is I'm automating my transfers, I'm automating all of that aspect of it, and I'm allowing the brokerage here at M1 Finance to automatically rebalance my portfolio, once again, based off of my target allocation. Now, my target allocation, I do change it up from time to time. I do change it, and I'm going to talk about that here in a minute, about some of the updates that I've made and why I've made those. But it makes it very, very easy. But if you, for example, you don't want to follow up on your portfolio, you want to set it up and forget it, like M1 Finance is one of the best platforms out there in my opinion. Now let's go ahead and let's shift gears here a little bit. And I'd like to share with everybody some updates that I've made to the portfolio and walk everybody through kind of where I'm at. A couple weeks ago, I shared a video here on the channel about my plans to generate a $2 million portfolio so that I can 100% live off of the dividend income from my dividend portfolios. And I went through that in that previous video. In this video, I want to share a little bit of an update on where I'm at. For the most part, everything has stayed the same. I've just made a few adjustments in terms of the number of holdings and the allocation. And when I was first setting up my portfolio here in M1 Finance a little over a year ago, about a year and a half ago, can't believe how fast the time has gone by. So last year, when I was setting up the portfolio, it was really, really exciting. And when I review other subscriber portfolios here on the channel in my Review My Pie series, I can see that from other people. New investors, when you're setting up your portfolio for the very, very first time, it's really exciting. And you know what it feels like? It feels like when you're setting up your portfolio, you're doing all this research, you're seeing all these great companies, you're looking at all the great industrial companies, all the great consumer staples companies. There's so many great companies, you just want to catch them all. So the main updates that I've made to the portfolio is in the total amount of holdings that I've had in the portfolio. So when I shared my last video around the generating a $2 million portfolio, in that portfolio, I had 80 holdings. And what I've decided to do is I want to focus more on my core holdings. And what I've decided is to reduce the portfolio size while it's still early, right? I'm still in the pretty early stages of building up this portfolio. And so I felt that if I'm going to do that, it's better that I do it now while I'm still in the early stages than doing it later on. So that was the decision that I made for myself. But the main reason why I decided to trim the holdings down was I wanted to focus on building up larger positions in my core holdings and really getting focused and targeted with the holdings that I had. Every holding that I cut out, I still firmly believe in the company. I had it in the portfolio for a reason. I think they're great companies, but simply the way that I have the target allocation set up, I've decided to focus on my top 50 holdings. 45 of them are individual holdings, individual stocks, and 5 are ETFs. Okay, so that's the big update that I've made is I've trimmed it down, and I'm going to share in just a second all the holdings that I have in the portfolio. And as always, I will leave a link to this portfolio in the description of this video. So I have 50 holdings now in the portfolio. I've also adjusted the target allocation slightly. Now, the reason why I did this is I want to reduce the dividend growth ETF target allocation from 60 to a target of 50%. And once again, I want to build up a more substantial position in each of my holdings and really make every position count. For example, the holdings that I have in my consumer staples, as I mentioned in my previous videos, these holdings will remain the same in terms of the core positions, those being Coca-Cola, Kimberly-Clark, Pepsi, and Procter & Gamble. Kimberly-Clark just took a huge nosedive here this week. I I loaded up on Kimberly-Clark in my Vanguard account, which I'll get to here in just a second. I am definitely buying the dip on Kimberly-Clark, but that's just me. But yeah, the other holdings in here, you can see the other holdings that I have in the portfolio. When I go down, for example, here in materials, I bumped up materials from 1% to 2% of the overall portfolio, and I've really consolidated to 4 holdings in my materials slice. So really, the big change that I've made here, or I guess update, is I've really doubled down on my core positions and I've adjusted the target allocation. Now, I do not foresee in the coming future to trim the portfolio down even more. I don't foresee it. I made this, from going from 80 to 50 was a pretty big change or update. I don't anticipate doing this regularly. In fact, I don't anticipate doing this in the future again. What I do anticipate is adjusting the target allocation here in the portfolio as I get closer to retirement. And that's what I love about M1 Finance. It makes it so easy to do that, right? Before I had it at 60, all I had to do was go in here and manually adjust it, and it was very, very seamless. So that was a really, really simple change. And going forward, I will likely, this isn't something I'm going to do on a weekly basis, not even on a monthly basis, but maybe every couple of quarters, maybe once or twice a year, I can go and I can reevaluate it. Really, the big goal for me is I want to make this more passive. I want to have it more passive, and that's why I'm focusing more on my core holdings. So looking at this from a different view, the core holdings in my portfolio, based off of the weighting in the portfolio, the highest allocated holdings will be the 3 ETFs here in VYM, SCHD, and DGRO. You can see their current yields over here, and you can see the CAGR, the compounded annual growth rate of the dividend. This is just the dividend, and this is the weighted dividend of this portfolio. This is not a simple average. This is a weighted dividend. And you can see, I hope you can see that. If you're interested in doing this for yourself, you can pause the video. This is how you calculate a weighted average. I've gotten a few emails from a few of you from my previous video on how to do that. This is how you calculate weighted averages on your portfolio. Kind of cool. Kind of nerdy and cool. M1 Finance does that for you, but if you don't have M1 Finance, say you're international, this is a way, if you're working out of Excel spreadsheets, you can do that and you can calculate it that way. And the same thing goes for the CAGR. You can calculate the average growth rate of the dividend based off of the weighting of your portfolio. So yeah, you can see here, so really minimal changes, I guess you could say, to the core holdings. Still have Johnson & Johnson the highest, 3M, Coca-Cola, Kimberly-Clark. Nothing there has changed in the top core holdings, except for a few I've bumped up a little bit. But yeah, that's how I have it set up. And you can see it goes all the way down. And the big difference between now and before I had about 30 holdings that were only weighted at like less than 0.5 percentage point. And the goal of this portfolio is to have $1 million. If I pull up my calculator here, and if I calculate, okay, let's fast forward 8 years or 10 years, and I have $1 million in this portfolio, what is that going to mean in terms of the average weighting, the value that each individual holding has? And if you do that, let me pull up my fancy dancy calculator here. And if you times that here, like for example, my projected amount that I'm going to have in this account for Kellogg's, for example, I'm going to have a calculated or a targeted amount of $5,000 in Kellogg's. And what I decided was I wanted to have fewer holdings, but have larger positions in my core holdings. And that's what I've decided to do. Now, if you recall from my previous video, when I talk about building up a $2 million portfolio, this is the view that I shared. I have 3 portfolios. I have the M1 Finance cash flow portfolio that I'm focusing on building up to $1 million. My M1 real estate portfolio that I don't really talk a lot about. It's more of a side project. I'm targeting a 6% over the overall portfolio and having $120,000 in there. And when it comes to, and then the Vanguard portfolio is 44%, and I'm looking to have just under 900K when we're looking to retire. So you can see the weekly transfers. I'm I'm transferring $1,000 every single week into my M1 cash flow portfolio, $125 into the real estate portfolio, and $900 into the Vanguard portfolio. So I'm on average on a weekly basis, I'm transferring over $2,000. And sometimes I transfer over a little bit more depending on, I'm in a commission-based sales role in my day job. So everything that I'm funding the portfolio with is from my day job. And so sometimes I earn more commission on a monthly basis and I have more money, and so I invest more. But my goal is that at least I'm investing at least $2,000 a week. And I will say very, very candidly, I have not always been able to do this. I understand that some people are investing $50 a week, $25 a week. Like, this has not been possible for me forever. So I want to be very, very clear. I want to be relatable, because if you were to ask me 3 years ago, hey Jake, how much are you investing in your portfolio? I kid you not, maybe a couple $100 a week or a month. So over the last couple of years, I've really been hustling. My wife and I, we now have a rental property. We're looking to purchase another one towards the end of this year. Like, really, my wife and I, we've embraced this side hustle kind of, just really, really this hustle mentality where we're really trying to cut our expenses, cut our consumer debt, and looking for new ways to make more money, right? Because I am in a sales position in my day job, I work more than your traditional 40 hours. I sometimes work on the weekend. I sometimes work late hours. Like, I'm not working a traditional clock in, clock out kind of job. I'm working much more than that. And because of that, because I am investing a lot more of my time, I am being rewarded accordingly. So what are we looking at here? So over here on the left, this is the goal. The goal is, by the time my wife and I reach early retirement, we want to have just over $400,000 in VYM and SEHD spread through our Vanguard portfolio and our M1 Finance cash flow portfolio. And in Vanguard here, this is the Vanguard portfolio and the holdings that I have in my Vanguard portfolio. Let me pull this up over here and let me just share this with you. That might be a little bit easier. If you want to take a look at this and look at it in more detail, I'll leave a link in the description below so you can check that out. So those are the updates that I've made. As you can see here, in terms of the goal of building up a $2 million portfolio still remains the same. The weekly transfers still remain the same. The allocation to my M1 cash flow, real estate, and Vanguard portfolio still remain the same. The big difference is here, or the big update is, I'm really trying to focus more on building up my core holdings while still maintaining a target yield of 3.5%. As the market goes up and down, I'm looking to still maintain that current yield of 3.5% for the overall portfolios. Thank you so much, everybody, for watching the video. If you're new to the channel, I'd invite you to subscribe. If you liked today's video, give me a thumbs up, and I'll catch everybody in the next video.